day, and from there we get a lot of different ideas to invest and stuff like that. So like what I said just now, Dr. David talked about three sectors. So like what you have mentioned just now, consumer staples, REITs, and banks. Okay, so I'm just gonna very quickly go through three of them, and then what we'll do is I'm gonna share some stocks, and then I'll ask Bowen's opinion on it, and vice versa. Okay, so the first thing is this consumer staples. Do you recognize the pictures, the food in that? Can you name some companies that actually produce this? Can you name some companies that produce this? What are the brands that you see under the consumer staples? Coca-Cola, Bowen, yes, of course, Coca-Cola. How about the rest? What can you see? Heinz, yes, Heinz, yes. Heinz, the tomato ketchup. Nestle probably is Hershey, if I'm not wrong. I'm not exactly sure, but or is it? Yeah, it's Hershey probably. Okay, and then it's Campbell soup. Yeah, Mondelez. Yeah, so there's a lot of different. So maybe let's just go into a bit of into the definition. What is consumer staples? Basically, these are the typical product you can find in the supermarket. Okay, the food, beverages, household goods, hygiene products. Okay, but they also include some like alcohol and also tobacco, and also some of the skincare products. Actually, I've got a very interesting company which I'm going to share about later. Okay, and these goods, why does Dr. David think that this is a good sector? He say, in good or bad times, okay, people still need this, and even when people want to cut, they will not actually cut. They will not cut. Oh, should be very fun. Food that you crave for during COVID. Yeah, actually true. During COVID at home, do you snack more? How many of yours that actually snack more? I did. I snack more. I put on weight during COVID, even though I cycle so much. For like Lays, okay, Pringles. Yeah, you see. So yeah, these are like comfort food lah. So consumer staples, whether in a good economy or in a bad economy, they should still be doing well. So a lot of analysts say that they are defensive stocks. Okay, they are defensive stocks. Okay, so this is the first sector that we're going to look at. Can you see this screen? There's a total of actually 32 stocks here. 32 stocks here. Okay, I got this from where? I got this from this thing called a ETF. Okay, it's a consumer staples sector, SPRD ETF. So it holds 32 consumer staples company, okay, in this ETF. Okay, and this chart actually shows the 1-year return, means the stock performance, and also the price to earnings. Like I say, I'm a fundamental guy. I generally look for things that are not too overvalued. So one of the way we can look at valuation is actually looking at this thing called price to earnings. Okay, so when I talk about price to earnings, okay, generally we look for different people or different criteria. I think Bowen look at about 15. I'm a bit more stingy. I look at about 12. But can you see the two companies that I actually has circled? This company called Tyson Food. Can you see Tyson Food? Tyson Food. What is the PE? What is the PE ratio of Tyson Food? What is the PE ratio of Tyson Food over here? If you can see, can you just type into the chat group? What is the PE ratio of Tyson Food? Yeah, 10.88. 10.88. Yes, so it's below 12. So it's something which caught my eye. Okay, and then there's also this company called Kruger. Kruger is not so popular in Singapore, they don't have, but it's very popular in the US. I would say it's a mid-size. It's not as big as Walmart. It's a mid-size convenience store. Okay, and you can look at it. This one, the PE is 11.76, so still below 12. Okay, then there's one more company which I was quite surprised they are actually put under consumer staples. Okay, there's this company called Estee Lauder. Are you familiar, especially the ladies, are you familiar with this company called Estee Lauder? Can you tell me what are some of the products from Estee Lauder? Do you use some of the products from Estee Lauder, or do you understand what are some brands that are actually under Estee Lauder? Cosmetics, yes. Any particular brand? Actually, at first I thought Estee Lauder only have Estee Lauder lah, right? But actually it's not true, no. Actually, Estee Lauder has a lot of other brands. Okay, let's look at it. So my top picks, okay, among the consumer staples. After that, you can ask what's Bowen's pick, okay, is firstly this company called Tyson. Okay, so Tyson is in the food service business, and actually during COVID, right, the price actually went down quite a fair bit. Okay, so this is an analyst report that says that there is probably some value because there's a discount. Okay, so as a value investor, you would like to find something there at a discount. You don't want to buy high, you want to buy low at a discount. Okay, so Tyson Food, and also because Tyson Food, okay, is also one of the big meat manufacturer that actually is going into what's that called? Not artificial meat. What's that word called? It's like Beyond Meat. I suddenly I missed my mind. What's that called?
Lab grown meat.
No, it's not lab grown. It's the other one. Is plant-based. Plant-based. Yes, thanks, Jasmine. Plant-based meat. Yeah. So they are also one of the first big companies that go into plant-based meat. So they are also doing something in that direction. So I like this company. Previously in our coaching classes, we talked about Tyson also because one of our insiders is actually working very closely with this company. So we got some information on that lah. So to me, I think Tyson 2021 probably will be doing quite well. Okay, so another company that I think is also has been doing well and will continue to do well is this company called Kruger. Okay, during the pandemic, right? You see, like Singapore lah. Okay, during the COVID, what happened? What happened in NTUC? What happened in Sheng Siong? Everything ran out. Okay, their business just Sheng Siong business go skyrocket. Okay, so the same thing happened in the US. Kruger business went off very well, but then the price actually had come down a fair bit. So in a way, according to the analysis, also our own analysis, this is actually quite cheap. Oh yeah, Lay is very correct. It's part of Warren Buffett stock portfolio. Wow, this one you also know. So that's something I'm also looking at Kruger. Okay, maybe Warren later can talk more about the charts and stuff like that. Okay, then there's this company which I talked about just now, Estee Lauder. Okay, actually, as a value investor, right, I would not be that keen because just now, if you look at the chart that I'm talking about, sorry, the numbers that I'm talking about, the PE ratio is about 50. It means that this company need 50 years. Okay, you buy this company need 50 years to break even. Okay, but the trend, okay, because you see, I'm an FA person, but I also know about technical analysis. So I look at the charts. So this line is the support, is the high, is the high in just before the pandemic started in February. Then what happened to the stock? Bam, it dropped quite a fair bit. Then after that, it recover. But you realize that it's actually in this is what we call a uptrend. Okay, it's moving in a very nice uptrend channel. So that's why even when the PE is at 50, okay, I still find that this company is quite interesting. Okay, then I start to research because I'm a person who need to know what the company does. Then I look at the company. So are you familiar with all these brands? They are actually all the portfolio under Estee Lauder. Hey, Bowen, do you use any of these products? Or your mother, your sister, your girlfriend, whoever?
Take a look. Wow.
I use Clinique before. My wife used Lamia. My wife also used Estee Lauder.
Don't have
Michael Kors is quite common. MAC, I think is the lipstick, if I'm not wrong.
I think
Phone you don't use any.
I only use Atomy.
Okay. Yeah, but I was quite surprised when I look at this, and this is what we call a brand positioning chart. So we can see that on top, on the right, on the top is the premium, on bottom is the entry level. So they cover a wide spectrum. Like Lamia, right? Lamia is a brand that is actually discovered by a NASA scientist. So the thing about this brand is it has very good healing property. So it has very good, like, let's say, example, you have cracked lips. Have you ever go to a very cold country, then you have your lips start to crack, right? This Lamia cream, right, just a little bit, use your pinky, and then dip into it and do it. Within 24 hours, you will heal. It's really that good. But one small bottle is about $300. Okay, so there's it's a premium product. Okay, but it covers the whole spectrum. Like Clinic is a very targeted at youngsters. Okay, it's a very classic brand, but the entry level is a very basic skincare. Okay, so they have different things. So that could be one of the reason why is able to survive or thrive actually during COVID. Because let's say lah, during COVID, I tighten my belt. I don't buy Lamia, but I still buy Clinic. You get what I mean? So they are very elastic in terms of that. So they have a lot of growth potential. So this is what I see in this. Okay, so that's my take for the consumer staple side. Paul, you got anything that you like to do in the consumer staple space?
Yeah, I think it comes down to consistency and also stability lah, especially when it comes to
Mm.
COVID. I think right now, I mean, in many cases, we see the rise in the number of cases. So certain stocks, especially the tech stock, yes, you can make money if it goes up, but the moment it drops, right, the drop is also very drastic. But when it comes to consumer staples, later I actually have a chart lah to show you.
Okay,
It's very very consistent. You buy, you can
okay,
sleep.
okay. Then I'll let Paul talk about it later. Just now there was a question from Charlie. Charlie's asking why not L Trail? Okay, L Trail is this company. L Trail is a secret company lah. So the PE is very low. But to me, I am not that positive about secret company. One is ethical issue. Well, it's not ethical, but it's just that there's a lot of people against smoking, and then there is this smart cigarette coming on, um, and stuff like that. So and the number of people actually smoking actually is on the decline, as far as I know. So that's why even though the PE is low, but I look at the growth perspective of this company, not that excited compared to, let's say, Estee Lauder. Okay, Estee Lauder, I think of it more as a skincare company. Okay, the thing is, cosmetic and skincare is a bit different. Cosmetic, right? Actually, cheap cosmetic also can do the job. But skincare really is uh, good skincare product really do wonders. But when you go for facial also, right? Yeah, so actually you start to realize not only girls do it, guys also go for facial and stuff like that. So skincare is something which I think is quite booming in that sector. Okay, so let's move on because we got quite a lot to cover. Next, I'm going to move on to this thing called REITs. You are familiar with REITs, right? I think in REITs, so basically it stands for Real Estate Investment Trust. They can be assets. Basically, it's a portfolio of income generating real estate. So you can look at hotels, industrial buildings, shopping malls, offices, even data centers. Okay, so very interesting. The unique thing about REITs in Singapore, why REITs is such a Singapore darling, is because REITs in Singapore are required by law to distribute at least 90% of their income. So a lot of people think about this as this is a very good passive income generating investment. Okay, can I have a check? How many of you have actually invested in REITs? If you have, can you just type in yes? Okay. Okay, May, yes. Carol, yeah. Oh, a lot, yeah. So actually, a lot of people when we first started out in Singapore investing, even myself, okay, the first thing that comes to become very popular is REITs because why? There's this thing called a dividend. Okay, they pay you dividend, and usually they pay you at a regular interval. And REITs is the only is the only category of companies that actually pay every 3 months for Singapore. Okay, the rest usually sometimes pay in 6 months, some pay in yearly. Okay, but like I said, there are many different types of REITs, many different types of REITs. So luckily, I found this website. Okay, it's not done by me. I'm not so hardworking. Okay, so you all want to find out more information, go to REITsweek.com. Okay, so they actually compile um, things I find that are quite relevant. Okay, for that, and they characterize the categorize it based on the industry. Okay, so firstly, there's the healthcare REITs. Healthcare REITs are those that do hospitals and stuff like that. And then there's the hospitality. Okay, so a lot of people always mistake. So hospitality doesn't mean it's hospital. Hospitality means there are hotels or service apartments and stuff like that. Okay, so this two is one of the REITs category. Okay, but in COVID times, okay, I'm not that optimistic about hospitality lah. Okay, because when travel is down, people cannot uh, um, come to Singapore to visit and stuff like that. So hospitality REITs is something which I probably would not be very keen at this moment. Okay. So how do you look at REITs? How do you value REITs? Do you all have some idea how do you all value REITs? What do you look at? Can you just type in some idea based on some of these characteristics? Do you value it based on price to book, based on dividend, based on gearing? Mm, any ideas? Okay, so very quick, maybe REITs 101. Okay, the first thing people look at is actually price to book. Price to book. So you need to be below how many? Below what? Below one. Price to book below one. At least below one. Or some more stranger one, we say 0.8. Okay, and then dividend yield. Dividend yield is how much yield you want to get out of it. So a lot of times we want to have, like personally for me, if anything less than 5%, I'm not interested. Okay, I'm not interested. So I want more than 5% for that. Okay, but there are actually more things about REITs to look at. But maybe let's just quickly go through the different sectors here. I circle this one. Okay, so these are the retail REITs. Do you think retail are doing good now in the COVID situation? If you go to the mall, is it still crowded? But what do you think? If you think retail REIT should still be doing well, you type yes. If you think it's not, then you type no. Yes or no? Can I have some response? There's about 100 people here, right? Some say yes, some say no. Surprisingly, I thought retail will be affected quite badly. But on the contrary, now you go to the mall, right? All the malls are full. And yeah, come returning back. And what is the thing that is holding them up? Not shopping, you know. Not everybody buy from Lazada, buy from Q10, buy from Shopee, right? Yeah, makan. People go in for the food. And most of the malls, if you look at it, right, 50%, at least 50% of the malls, okay, is made out of F&B outlets. So this is the thing that are holding them up. Okay. So in terms of retail, I'm still not so optimistic. I'm still not pessimistic. Because Singapore nothing to do, so go more. Yeah, got aircon also lah. Yeah. And raining day, where can I go? Can go more also. Capital Land. Why I'm interested in Capital Land is the reason is because it's the biggest. It's really the biggest, and also it has actually merged the retail and the commercial together. Okay, so that's something which I'll go into more detail later. Office and commercial REIT. What do you think will be the natural consequences of COVID-19 to offices? Do you think companies are looking to upsize the office or downsize? Work from home. Yes, that's the favorite word for 2020 and is continuing to 2021. Downsize. Yes. So this is another sector which I not very keen because if offices are downsizing, then they have so much surpluses. It's a matter of supply and demand, right? So people will actually, the prices of these rentals will come down. Okay, so I'm not that optimistic. Okay, for that. So I'll skip this section. This is very interesting. This REIT is what we call industrial. So industrial is what? Warehouse, logistics, and stuff like that. Okay, and I actually circle two of these. One is called EC World REITs. Okay, this is actually a China REIT. Okay, it's focusing on e-commerce. Okay, later I'll show you. Most of their warehouses are in Hangzhou, which is the hub of e-commerce. And then there's this Keppel DC REIT, which has been a darling for the past 2 years in Singapore REIT. Okay, but like I said, how you value REITs, you always look at the price to book ratio, right? So Keppel DC REIT, the price to book ratio 2.38. Do you think it's high or low? If you think it's high, you type high. If you think it's low, you type low. Is it the price to book ratio? Is it high or is it low? Carol say hi. The rest? Okay, Irene say hi. Yes, yeah. So it's generally higher because usually we are willing to pay up to price to book of 1. So now it's 2 times. So you ask me, is this company cheap? I don't think it's cheap lah. Okay, but does it still have growth potential? I don't know. Okay, we depend really because this is a very hot area to be in because data center, the more things that need to be housed on the cloud, the more data center is needed. Okay, so it is an effect of the cloud industry. Okay, so if you're very positive about cloud, then I think then the data center is still in huge demand. Okay, so my top picks right in S-REITs. is actually EC World REITs. So if you look at this one, right, EC World REITs, right, you see it has about I think 8 of the warehouses in Hangzhou. Okay, and this is where the e-commerce things are happening. A lot of things of your Alibaba and Lazada and stuff like that ship from Hangzhou. Okay, so this is the one. Okay, and so it's also give me an exposure into China stocks lah. So this is something which I'm interested. And also, if you go back and look at it, right, it's paying me quite a decent dividend, 7.71. So my criteria was about 5%, right? So 7%, not bad, right? So yeah, this is something that I'm interested in. And it's paying good dividend, and the price to book ratio is actually what, 0.8, below 1. Okay, so this is why I'm okay. Personally, I'm invested. I would say I'm invested in this uh, since about 1-2 years ago. Okay, but I like this company. Keppel DC REIT, it really depends. It has been growing very well since 2010, 2015. You see, it's growing. Assets, AUM means assets under management. So you see, from 1 billion to 2 billion, it's been growing. But the question is, can it still grow so fast? I don't know. Okay, I don't know. So this one a bit question mark. Okay, but CapitaLand Commercial Trust, this one is because there was a merger. There was a merger that merged the retail and the offices together. And being the biggest landlord in Singapore, and also they're not only in Singapore, they have actually business all over the world. Okay, and usually when they're the biggest, right, and they also pay a decent dividend of 5%. So I would say I will keep it in my watch list lah. Okay, but in out of all these three, I think EC World REITs is something which I'm really invested, and if the price is right, I will go in some more. So that's my pick on REITs. Okay, I think I'm going to just quickly go to the next one so that Owen can share his things. I'm going to talk about banks. Okay, banks. I think Owen has shared during his fundamental and also some of his webinars about banks. So Singapore very boring one. Only 3 banks: UOB, DBS, OCBC. Okay, only 3 banks. Okay, which one is better? You just look at the number. Okay, we can tell. But what is interesting in this space is there's this thing called digital bank license. Okay, so back last year, 14 of them were shortlisted, but it was announced, I think, in December last year. Yeah, just a month ago, that 4 of them got the license. Okay, out of these 4, right? It'll be interesting. This company C. Are you familiar with this company C? SEA? If you're familiar with Shopee, right? Okay, this is the mother company of Shopee. Okay, so this is C. It's an e-commerce giant, and now they get a full banking license. But then you say, but they don't know how to do bank. It's okay. They can go and hire people who know something. Okay, but they have the financial power, and they also have the audience. They have the people. Yeah. Yeah, C is also inside ARC. ARC is best. Yeah, okay. So N Group now a bit Jack Ma also don't know go where already lah. So N Group, I'm not so sure. Okay, but C I think is quite interesting. And okay, so let's talk about local banks first. So I say local banks. Okay, I show y'all. You all want to screenshot. You all want to do. This is my criteria lah. Okay, basically it's either price to book 0.8, dividend yield more than 5, or PE less than 12 lah. Okay, yeah, if it hit any of these, right, I think it can make it, because to me Singapore banks are very safe. You can, the question is, you buy it cheap or you buy it cheaper only. Okay, in the long run, bank price will go up. So it's only whether I get it at the right price. So to me, like currently price to book ratio wise, I think OCBC is slightly better. Yeah, is better. Oh yeah, Linda, you're right. Deep valuations not good for C. Yeah, valuation cannot do for C one, because it's a momentum stock. yeah, it's a momentum stock. Later we talk about the charts. Okay, United UOB. Okay, the price PE is quite interesting. The PE is below 10. Okay, the PE is below 10. Okay, DBS. Okay, it's the number 1, big but not exactly cheap lah. Okay, so if you ask me, my take, I still like OCBC. And one of the reasons I like OCBC is also because Great Eastern, which is an insurance company, okay, is wholly owned by OCBC. So that's also a very, I would say, a cash cow company that they are holding. So OCBC, more positive about it. Okay, but all this I'm sharing disclaimer, do your own due diligence. This is just my view, okay, for educational purposes. Okay. Okay, this is the interesting news I want to share with you all. So C actually acquires an Indonesia bank just to gain foothold in financial tech. So this one is really, it's like they don't need to know. Okay, they can buy over someone and then learn from there. So as long as you got the financial power, you can do that. So this was very recent news just yesterday, 13th of January. Okay, so this was very, very recent news. Okay, my last part, I'm going to talk about banks in the US. If you know ultimate investing, most of the time we teach our students how to invest in the US because we can do this thing called options. In Singapore, you can't really do options. Okay, so I just ranked the top 5 banks in the US based on assets. Okay, so the first one is JP Morgan, then Bank of America, Wells Fargo, Citibank, and then US Bank Corp. Okay, of course, there are other banks inside, but these are the top 5. And my top pick is actually these 2 companies. This one a bit displaced. Okay, the reason why Wells Fargo is interesting is because the price to book is below 1. Okay, Bank of America is more because of the charts that we look at. Actually, these 2 companies has been covered by our community. And actually, I think about, when was it? We have a buy call for them. Do you remember?
About a month ago.
A month? Wells Fargo, you did.
November 11, about December December.
Yeah. So we saw some value and we did a buy call. And some of our students actually make money from this already. So I'm still positive about these 2, Bank of America and also Wells Fargo. Oh, Rachel, yeah, thanks. Yeah, Bank of America was November. Yep. So, okay, Bowen, I think this is your part.
Yeah, that's right. So I'll take over from here. Okay, so for now, can we just put in a thank you, Paul? All right, to actually thank him for all the information that he has actually shared with us earlier on. Can everybody just type in thank you, Paul? Thank you, Paul.
You want to share on your side, Bowen?
Yeah,
Or,
I'll be sharing on my side. All right, so maybe before I share with you all the chart itself, all right, so can you all just type in all the companies that Paul have actually went through earlier on? All right, what are some of the companies that actually still stay on in your mind one that after this, right, you want to actually go and check and see whether can buy or not one? Okay, what are some of the companies? Can you all just type it in? All right, Croger, OCBC, Tyson, WFC, BAC, SEA, what else? EC, World Rate, UOB. Okay, fantastic. All right, so what I'm going to do is I'm going to start off with the first company, all right, that actually Paul went through, and then I'm going to go through all the way. Okay, so from the start to the end, right? Okay, just now Paul has mentioned all the FA, which is the fundamental, what a company does and things like that. But for me, I'm going to focus more on the technical chart. All right, so starting with the first company, can you just type in what is the first company that Paul mentioned? To give you a clue, technically it is not a company. Technically, it's not a company. It is a basket of company. Yes. Charlie got it correct. Okay, and that is XLP. Okay, XLP. Allow me to share screen. In fact, just now Paul has already shared the answer. Right. So if you look at the top left-hand corner, this is actually the ETF. All right. Basically, ETF is a basket of funds that contain the consumer staples. So inside this ETF, basically you have a lot of companies that belongs to the list that Paul has mentioned earlier on. Right. So you're not just buying into one, but you're buying into a basket of companies that belongs to this particular category. So if you look at what happened earlier on in March this year, right? So most of the stock actually went down quite significantly. In fact, the market went down almost 30%. Right, but if you look at what happened to this XLP, which is the consumer staples, you realize that the drop is actually slightly lesser than the overall market condition. And that is exactly how consumer staples work. That means when it drops, it doesn't drop that much because, again, these are companies that whether COVID or no COVID, people still have to go and buy one. So in a way, it is a bit more what we call defensive stocks. Okay, stocks that is actually good to hold and hold it there for a long period of time. So what happened is that, right, okay, when is a good opportunity to actually jump into this particular stock? I hope you all still remember what I shared during the UI day. I shared with you all in terms of technical, we look at two key things. Can you all just type in what are the two key things that we look out for? Anyone still remember? What are the two indicators that I shared with you during the UI day? Okay, 20 cross 50, or what we call a crossover, whereby you see the line cross here, cross there. Okay, that's the first one. What's the second one? What's the second one? There's a second one that I actually pointed out. The first one is crossover. Yes, Jimmy, you are right. Okay, the second one is actually crossing new high. Right. So looking at this particular ETF XLP, can you all see that, right? There is actually a crossover, right in the middle, somewhere in June. Right. So if let's say today you actually look back, okay, June 2020, that is actually a good timing for us to actually went into this particular ETF. Okay, back in June when the crossover actually happened, you can see the green line crossing over the orange line. So coming back to right now, if you look at the current market, it has already gone much higher. So honestly, if you ask me right now, do I want to go in at the current moment? Probably not lah for XLP, right? Yeah, XLP. Probably for me, yeah, my risk appetite is a little bit higher, right? So this is probably not the stock that I will go in right now. But I just want to share with you one thing. If you look at XLP, this is the same stock, except that I actually pull out the time horizon from 2020 all the way to from 2010 to 2020. Can you see how powerful this kind of stock can be? Right? Can you see this is literally like one straight line? It just go higher and higher and higher and higher. Right? So the only thing, okay, but for me personally, if you want to invest in a consumer staple, be prepared to actually buy and then hold it for the next 10 years or 15 years, right? And just let it go higher and higher, right? Don't expect the stock to go up like 100% within a year or 50% within a couple of months, okay? Probably not this ETF. Okay, and let's move on to the second one, and that is actually Tyson Food. So let me just look at the chart as well. Right, so if you look at Tyson Food itself, okay, right now, of course, we can see that the crosses, there's a little bit of like a sideways trend from March all the way until November. So what I am personally looking out for, okay, same thing, I will not go in at the current moment for Tyson Food, but what I'm looking out for is actually for the price to break the red color zone. Can you see the red color zone? That is basically the previous resistance. All right. So if let's say Tyson Food is able to go somewhere around $70, then that is actually the time that I will actually enter for Tyson Food. Right, and of course, moving on to the next one, and that will be Kroger. So Kroger pretty much, yeah, even though this is a Warren Buffett stock, but of course, like Warren Buffett, when he invests in it, he is investing for the long term. So if let's say today you are looking for some short-term opportunity, again, I would not recommend you to go into Kroger at the current moment. You can actually see that it seems to be coming down. All right, you can see that actually the crossover is the opposite direction. It is coming down, right? So probably right now I will not enter Kroger as well. Right, so that is for the consumer. The consumer, I think the consumer itself, they have actually went up quite a fair bit from the March low in 2020. So right now they are actually on at an area whereby it is not exactly high enough for me to enter. So I will probably stay away from Kroger as well as Tyson Food. Okay, coming back to the STI index, I think a lot of us are actually invested in the Singapore index, in many of the Singapore stocks. Right. So in fact, I wasn't really that active in the Singapore stocks. But again, let me just share with you how technical analysis can be very, very powerful. Once again, if you look at the chart itself, can you see the crossover happening in November 2020? Can you see the green line crossing the orange line? Right. So actually, that was a period of time whereby you start to see a lot of Singapore stocks start to go higher and higher and higher and higher. Right. So yeah, that time was actually the time whereby if you are not invested into the Singapore banks, that is actually a good opportunity for you to jump in. But of course, right now, I'm not saying that it is not a bad time, because as you can see, the price is going higher. So you can see that there's actually still room for the Singapore stocks to go even higher. And if you look at the three banks, DBS, OCBC, and UOB, right now, I would say that OCBC is still relatively undervalued based on PE ratio. All right, based on PE ratio, OCBC is still relatively undervalued, slightly undervalued. So I would say that OCBC is still quite a good timing to enter. There's actually still room for growth as well. All right, so maybe up till now, okay, just want to make sure that are you still catching what I'm saying? All right, if you are still catching what I'm saying, or you are learning something, can you just type in 133 so that I know that I can actually move on. All right, because this can be a little bit technical, like you know why am I saying such technical things? Is because this is technical analysis, so I have to be a little bit technical. All right, so that is for the Singapore index. So for those of you who are still holding on to Singapore stocks, don't worry. We can see that the stock is still it has more room for upside. It can still go higher and higher, right? So just continue to hold your Singapore stocks. Okay, so coming back to so you realize that I'm coming to the banks already, right? So I actually skipped through the REIT itself, right? So for me personally, pretty much the same as what Paul mentioned. If you're investing in REIT, right, okay, you should be focused a lot more on dividends, right? So when we look at technical chart, when we look at technical analysis, probably more often than other, we are looking more for capital gain, right? We're looking for more for capital gain. So I would say that for REIT, if you want to invest in REIT, just look for the dividend yield. As long as the REIT is good, you know that they are able to expand well, they are managing the gearing ratio good properly, and the dividend is more than 5%. In Paul's case, he's looking for more than 5%. And if you fulfill your criteria, just invest in it and collect, the 5% on a quarterly basis. All right, so I'm going to skip off that. Anyway, for REIT itself, is a huge topic, which I think we can actually allocate a full 2 hours just to talk about REIT. So I'm going to focus on the bank itself. BAC, okay, Bank of America Corporation. Just now, what Paul mentioned is that in our community, we actually shared this particular stock back in November. Can you all share with me why do we share it in November? What was the thing that you can see over here? November 2020. Right, so just to share with all of you, November 27, 2020 is a very, very special date, which you all have to take down inside your calendar. All right, can you all make a guess what happened on the 27th November 2020? What do you think happened on this particular day? Anyone want to make a guess? Just make a random guess, don't need to get research, because probably you can't research the answer out. Anyone? Biden got elected. Okay, wow, fantastic. Okay, yeah, Rachel is very, very close. Okay, 27 November is actually my birthday. All right, so I just letting you guys know so that on 27 November 2021, please prepare a birthday present. Okay, you can actually send it to my house. all right. Yeah, but just kidding, but anyway, the date is real, so you all really can prepare a present. Right. Anyway, jokes aside, okay. So just now you all mentioned the crossover. Yes, exactly. That happened in November. Can you see the green line crossing up the orange line? So, in fact, sometimes, right, okay, what I will do is, am I lagging? Yeah. Anyway, one more thing is sometimes I will wait for the orange line to also cross the red line. Can you see orange line crossing the red line? Right. So that is also another opportunity for you to enter. So you can see that in the November period, there's actually the signal for us to actually go in based on BAC. Right. And that is why a lot of our community members actually went in, and the price has actually went up quite a fair bit also. Another reason I want to share with you today, okay, which maybe we have released before, maybe we have not. One of the other reasons why we invest in BAC instead of any of the other banks is because if you look at this particular website, okay, on the top left-hand corner, you can see this is Warren Buffett latest trade. All right. So what happened is that I'm actually in close contact with Warren Buffett. So sometimes he will send me his list. So this is basically the list that he sent me in September. So you can see the Bank of America was something that he added quite a fair bit to his portfolio, right? And if you look at all the banks itself, some of the banks, for example, at the bottom, you can see JP Morgan, PNC Financial, Wells Fargo. Okay, so he's actually selling away quite a number of US banks, but he actually add on more of Bank of America. So what does it tell you? When Warren Buffett is selling his other bank, and yet he is buying Bank of America, it actually shows you how confident he is. right? And you can see that his overall number of shares, right, is actually 1 billion shares. Okay, 1 billion shares at a price of $33. So that is about $33 billion in this particular bank. So that is a lot of money, right? And so with this news, and of course, on top of the technical analysis entry, that is why we actually are pretty confident about Bank of America. So having said that, a lot of people will be like, so just now Paul also mentioned another company, and that is Wells Fargo. If you look at what Warren Buffett did for Wells Fargo, he actually reduced the position actually at the bottom. Wells Fargo and Co. He actually reduces slightly. But one thing you also want to take note is if you look at the right hand corner, despite him reducing, right? Okay, can you see that he still owns about 127 million of Wells Fargo, and that is still a lot of money, right? So unless he actually sold out, because sometimes, especially for Warren Buffett, he actually do some portfolio rebalancing. So for me, of course, given a choice out of all the banks, which one would I choose? I would choose Bank of America. But again, if you look at the chart of Wells Fargo, honestly, if you ask me right now, okay, coming back to right now, because I think I missed out this just now. Bank of America right now can enter or not? Okay, you can see the green and the red line, red square over there, right? That is basically your risk reward. So which means that if you look at the green color zone, that is the potential gains that I can make. Okay, there's the potential reward. If you look at the red color zone, that is the potential risk. So can you all let me know which one is bigger? Red is bigger or green is bigger? The reward is bigger or the risk is bigger? Yes, exactly. Yeah, exactly. All right. So the risk is actually bigger in terms of Bank of America at the current moment. So that's why, again, right now, please do not chase this particular company. If you have not entered, don't go in anymore. Right. And of course, if you go on to the next one, which is Wells Fargo, same thing. This is a bank. Okay. Unfortunately, Warren Buffett did not buy more, but yet this is still quite a substantial holding in his current portfolio. Right. And I think like what Dr. David Kuo actually mentioned, he is actually bullish of the banking sector. He believes that this is a sector that is still relatively undervalued, okay, based on the overall market condition. So if you are bullish about the market in terms of the banking sector, in terms of the charting part, okay, you can see that the green portion is way larger than the red color in this particular portion. And if you look at the percentage, the potential gain that you can actually look at is around 26%. All right, 26%. So once again, okay, please do your own due diligence. These are actually just based on how we actually look at it from a technical analysis perspective, right? But if you ask me right now, comparing Wells Fargo and BAC, from a technical chart, Wells Fargo is a much better position to enter at the current moment. What is this indicator? This is not indicator lah. This is just showing you the percentage. Okay, I call it a risk reward ratio, RRR, triple R. All right, so the next thing that people will be asking is, so Bowen, how to take action? Should I buy share or should I buy option? Okay, I will just share with you this testimonial by one of our students, and then you decide whether you want to do shares or you want to do options. So on the left hand side, basically the student messaged me and say that, hey Bowen, good news, I recovered the cost for my course already. Then sending you the BAC one so that you can show others. Then I say, yeah, that's awesome result. Then he said something very important. For the same increase in price, increase in ROI for options is much greater. Okay, so what he did is actually when we actually gave them this particular entry to go into BAC, he actually bought both. He buys share and he also go and buy options on the same day. Of course, it's not the same timing, maybe about 5 minutes different timing, but it's on the same day. On the right hand side, you can actually see the difference in the return on investment, the ROI. The stock went up, yes, which is good. The stock went up 19%. Okay, and that is quite good. I mean, 19% in a few months is a lot way better than your OCBC, DBS, and UOB. Okay, so invest in BAC. Okay. Yeah, but anyway, if you look at the option return, it's actually 133%. That is about, I don't know, about 8 times, right? Is it 8 times? No, about 7 times. 6 to 7 times of the share return, right? So once again, like I said, if you know how to do it, please use option to actually enter especially when you're riding the trend, right? Take advantage of this knowledge that you have. Right, and I just want to also invite one of our students. Her name is called Celine. So Celine actually joined us, if I'm not wrong, last year. Yeah. So maybe can we invite Celine up so that I can also ask her some question, because if I'm not wrong, right, she also bought into BAC, and I just want to hear from her why did she buy it, and how does she feel? Celine, are you here?
Celine, are you able to? She couldn't unmute. Hold on, because
So
she's not a co-host.
don't worry. Yep, you are an option guy. That's right. Lay is right. I am an option guy.
Yep. Celine, you should be able to unmute yourself now.
Hi, can you hear me?
Yep.
Yes, we can hear you, but I can't see you right now.
Yeah. No, better show this face better.
Okay.
Now cannot show.
So you're just imagine Celine face. All right. So Celine, can you share with us when do you join the course, our program previously?
I think I forgot already. August, July. I can't remember.
Yeah, so not maybe about 4 or 5 months Okay. Did you enter BAC or not?
Sorry again.
Did you enter into BAC, Bank of America?
Yes.
Why you enter? I just curious.
Because you asked us to enter. No, just kidding. I think that time you were sharing that Warren Buffett bought in BAC, and then that was the only bank that he added his shares in. So this add in the confidence in this particular stock, and the FA itself is also okay at the point of time. Yeah.
Right. Fundamentally, it's also quite a strong bank.
Yep.
All right, that's good. Then I just want to ask you, if you don't mind sharing, what is your ROI for this BAC right now? Are you still holding it?
Yes.
Still holding it. Roughly how many percent? Is it more than
170 around? Yeah.
Anyway, I just want to ask you a more important question to benefit the rest of the participants over here. Have you ever thought of selling it at any point?
Yes. I was so afraid, what if it comes down so I seek for advisors from the community. So the community itself give a very strong support to the students. So they will give advice or give feedback, whether you should what should be your action now.
Okay. Yeah. I think why I mentioned this particular point is because, right, I think one of the biggest mistakes that a lot of people make when it comes to investing is they actually took profit too early, or they actually never cut loss. That means if the thing is losing money, they just keep holding it until the company disappear, get delisted, right? And I think coming to the first point, whereby a lot of times, let's say I have a stock that's making money, 20%, 30%, actually we are very happy already, right? Because that could be almost like a 10-year of interest from the banks, right? 20 to 30%. Even if you collect dividend, like 5% a year, right? That's like 4 years of dividend. So we are always tempted to take profit when it comes to 20%, 30%, 50%, or even 100%. Wow, confirm take profit. But right now, you're actually still riding on like 170%. I think just now you did mention, what if the stock drop? How like that? If your 170% suddenly drop to 100%, how?
For us, we do a stop loss, so we actually so-called cover our losses so that we don't make too much losses, in a sense. I'm not sure whether I explain it correctly or not, but in a way we are I would say we are confident that it won't go to zero for the profit wise. Yeah.
Okay, that's cool. Yeah. So basically, what we did is we actually have this thing called a stop loss. All right. So in the event whereby if the stock really drop, right, maybe at 150% or 140%, the system will automatically help us to take profit, sell the position, and then we are happy with 140%. But in the event whereby if the stock continue to go higher, we will continue to continue to ride this particular stock from 170 maybe to 180, 190, even 200%. Right. So I think when it comes to investing, right, always make sure you have a game plan always make sure you have a system. And everybody just type in game plan, GAMEPLAN. I think that is very, very, very important when it comes to investing. So even in 2021, as much as we can share with you what stock to buy and everything, okay, if you do not have a proper game plan, you do not know when to go in, you do not know when to get out, then it can also be relatively scary. All right. So, anything you want to share with the rest of the participants? Maybe one key message to the rest of them from Celine?
For myself, because I'm a beginner in investment, it would be, I would say it is very important to join a community that can help you in your journey, because you need the support, you need the, I would say you really need the support, you need the guidance from all the seniors as well as the trainers. So if there's a one piece of advice, I would say join the right community.
Wow, I want to give you a clap because you sound like a sponsored post, as if we have rehearsed this before. We have not rehearsed this. So anyway, thanks a lot for sharing with us your feedback. And we're happy that you actually mentioned community. Okay. So can we all type in thank you, Celine? Can we all type in thank you, Celine, for sharing? Okay, again, it is not easy for us to actually go to Zoom. Okay, me and Paul, our face is a lot bigger. We are immune to talking in front of Zoom. But for our students, it's relatively new, a bit scary. Right, so just let's motivate Celine and put in thank you, Celine. So what I'm going to do right now is I'm going to share with you my personal view of how the market is going to move. All right, maybe over the next couple of weeks and couple of months. All right, and some market updates as well. So if you look at the right-hand side, okay, some of the wordings right now, right, this is something that I shared within our insider community. I actually mentioned that the market uptrend is still intact. Okay, so in simple words means that I believe that the market will continue to go higher. However, a small pullback would be normal for a healthy uptrend, which means that if you see the stock dropping 5 to 10%, right, that is totally normal. Okay, so you don't have to be too alarmed if the stock overall, the SPY, okay, looking at the S&P 500, okay, if the S&P 500 drop by about 5 to 10%, don't be too alarmed because that is very, very healthy for a normal pullback, before it goes higher. So if you look at the chart itself, you can see the red line that I draw. That is the potential thing that can happen. That means it dropped and then before it goes even higher. Overall market sentiment, this is what I feel. Vaccination is happening everywhere, and with more vaccination getting approved from FDA, it is definitely a good news. However, we can see in the news that certain countries like US, Europe, Japan, and Malaysia, the number of cases actually went up. Right now, the numbers are pretty scary. So do expect some volatility coming from the market as well, because of the uncertainty. And of course for China on the other hand is relatively safer. The government has managed it really well, and that is very, very important because China is actually a key to manufacturing, and many of the US listed companies, they actually require a lot of their parts from China. So if let's say China were to have a massive lockdown, that would actually have a huge impact on the whole supply chain, right? And it will affect many other companies in the US as well. So right now, to me, that is also a good news. And the last one is actually more government funding after Biden inauguration, which is going to happen really, really soon. I think in less than a week time, right? Then that would also mean that more money will actually flow into the stock market. So I think for the US citizen right now, very simple. Like give me 2,000, right? I put this 2,000 into the stock market, and I hope that 2,000 will become, I don't know, 10,000, 20,000. So that is why a lot of US people are going into options without even knowing how it works. Just throw the money there. So short-term wise, it can be a good thing because a lot of money flow into the market, right? But of course, we also know that the big fish will be there, right? Sooner or later, they will come in and eat them up. So that is where the pullback will happen. So for all the new investors, they will get scared when the stock market drop by 5 to 10%. But for those of you who know how to look at the overall market trend, don't have to worry too much. And so my last message for all of you is actually this a bit long, okay? Please don't mind me a bit also. Market volatility is definitely much lesser as compared to 2020. This is just like our blood pressure. We do not want it to be too high or too low. So I do find that the current market is actually at the right timing. You know, it's not exactly very overly bullish. It is not exactly too boring as well. Right. So for me, right, I'm actually a little bit more active watching the market. All right. So hence I'll be jumping in and out of the market a little bit more. So right now, I'm actually risk off the market. That means I actually close off all my position, pretty much all, except for two small positions that I'm still holding. Right. So for me, very simple. If the stock market continue to go higher from now onwards, maybe for the next couple of weeks, the only thing that I lose is opportunity cost. I'm not going to lose anything. But if let's say the price actually drop, I will be looking for a right entry to actually go in. Right, and I think just now what Celine mentioned is actually this thing called a trailing stop. So the whole idea of trailing stop is to actually turn your, risk on to risk off. So the system actually help you to actually get out of the market when the market actually change direction. Right, so you just need to know how to do it, and that would actually help you to save a lot of potential losses in the future. Right, and of course, if let's say today you are those people who don't like to look at the market, you just want to buy and hold, so you are those who actually look at long term and prefer to stay risk on all the time, I think it is also fine as well. Okay, most importantly is to understand your own investment style that suits your investment temperament and your investment time frame. Right, and of course, very important is to enjoy the process and keep learning as you reflect on your trades. If you are learning something so far from what we have shared for the last 1 hour, can you just type in learning? All right,
Okay.
I'm going to pass back to Paul.
Hey, Bon, can I just check with you? So there's 154 people here. Some are in our community, some are not. But let's say today we share, it's a bit confusing, right? For me, I say FA, A can buy. But then Bowen say ABAC cannot buy, this cannot buy. Then if they want to learn the whole process of how to filter from FA to TA and then to use option, what can they do? What can they do?
What they can do, of course, join our.
Yeah, so we are still running a offer for the UI day, right? So maybe you can just share a little bit about that. So for people who still want to join us before the offer expire, then they can actually join, like take action. Yeah.
All right, yes, of course. Maybe we just do a quick check, right? How many of you here have not yet attended our online program one? Can you just type in 111? If you have not attended any of our program before, can you just type in 111?
Okay, quite a number. Okay.
Okay, yeah, because I think right now we are actually in case some of you do not know, we used to run a physical class in Singapore for our investment classes, and we were actually charging like I don't want to share the full amount but it's definitely the four figure, like $1,000 over, right? But of course, because of COVID, that's why on the UI day itself we actually launched this online program so that everybody can actually start learning. So whatever I've shared earlier on, on FA, on TA, on the strategy, how to do options, everything we teach you right in this online program. And actually right now, until the end of the month, we are still running this promotion whereby it's actually very, very affordable. All right. So yeah, for those of you who have not yet joined us, I really do encourage you to actually join us because we are confident, very confident that if you actually join this online program, pretty much with one trade, you can make back that amount, the cost fee itself. Right. So maybe if you all don't mind, I will just share with you all the program itself. Right. Can I just ask you all for permission? Is it okay if I just do a quick sharing on the promotion that we are running? If it's okay, can you just put okay?
Okay, quite a lot of okays.
Okay, that's cool. Actually, why I asked this is because I'm looking for my PowerPoint. Yeah. Right. Yeah. So this is a bit.
So like what Paul has mentioned, right? We used to charge four figure, and this year 2021, we really want to give message value, and we decided to turn it into like what we are offering is a teachable program that is on video. The good thing about teachable program is you can actually view it many times. Previously, we used to run it just like a 2-day 9 to 5 sort of course, but a lot of people say I cannot make it at this time, or I have other commitment, I can only do half day and stuff like that. So now everything is actually on the video. You can watch it as and when you like it. So that's the good thing about it. And then Paul will also share with you a bonus that we are giving also. Yeah, Bowen, go ahead.
All right. Yeah. So maybe for the next 5 to 10 minutes, okay, allow me to just very quickly share with you this UI Trend Investing Masterclass, okay, which we actually officially launched it during the UI Day on the 6th of January this year, lah, just a couple of weeks ago. So basically, right, this program itself, right, will cover 3 areas of investing. The first one is fundamental. So what is fundamental? Basically, if you look at some of the questions over here, we focus a lot on companies itself. Like, for example, am I buying it at a good price? Does the company has a competitive advantage against its competitor? And of course, can I collect stable and growing dividends? All right. So Paul, maybe if you don't mind, you help me to cover this part while I connect my laptop to the PowerPoint.
Oh, okay. So we talk about technicals, right? So I'm not the best person to talk to. Yeah, actually, we have a guru who is actually based in Australia. His name is Ivan. So he has been a stockbroker since 20 years ago, and he's very, very good in technicals. So most of our syllabus is actually developed by him. So why you need technicals? Like I'm a FA person, why I need technical? Okay, FA tell me what is a good company, but it doesn't tell me when is a good time to buy and when is a good time to sell. But technicals allow me to do that. So by combining FA and TA together, I can actually time my entry and time my exit. And a lot of times, like if you heard about technical analysis, it's about market psychology. Okay, it's about the behavior of the everybody inside the market. So by looking at charts, you are actually looking at what? You're looking at everybody's consolidated behavior. So when there's fear, right, you can see what the stock price will plunge. And when there's bullishness, optimism, right, the stock price will just go up. So it's actually just a way to measure psychology, which I think is really, really wonderful. And like what is being said in the slides, right, cheap can go cheaper, expensive can be more expensive. So if you are using purely value investing, right, you can buy something that is cheap, but it will go cheaper. So, and you'll miss out a lot of opportunities like Zoom, Tesla, and stuff like that. They're expensive, but they just keep going up. So over the years, I've actually moved my investing philosophy from just pure value investing to actually a combination of FA and TA. I think Bowen now can pass back to you.
Yeah, sure. And maybe just the previous slide, right? Maybe I'll just add on one more thing, like something that I realized over the years, right? Because I think right now one of the trends is, of course, like a lot of people say that the stock market is so expensive, Tesla is so expensive, all the stocks are basically all very expensive, lah. But if you realize one thing, right? Especially, right, I just talk about these 2 products. Okay, one is Rolex, the other one is Hermes bag. Okay, you realize that the price of this bag will just keep going higher and higher and higher. And every time, right, they increase the price, right, what happened? The demand actually went up. People were like, you're going to increase price already, I better go and buy now. I think that is basically the same human psychology when it comes to the stock market. The stock, when it goes higher, right, again, like I said, there's no limit to how high the stock can go. So some people will say that I think Tesla will reach 1,000. Then some people will say, I think Tesla will reach 2,000. So you realize that there is no number to it. And that is why when a stock is at the highest point, it can actually keep going higher and higher and higher and higher. And that is actually a good thing. And that with technical is something that can help us to make money. All right. And coming to the third one, which is options. Options for us is basically more on the execution. So for us, we focus a lot on options instead of buying share. Reason being is because option itself can generate, of course, number one, higher return. The second one is actually because option requires lower capital. Okay, it actually uses a smaller portion of the money. It's basically a fraction of how much money you need to buy share. So it fulfills this criteria: lower capital, high return. I think there's no reason why you should not jump in. But of course, having said that, option itself is a very, very slightly more complicated instrument. And that is why if you are not familiar with it, you can be playing with fire. And that is why for us, we also want to create this program is because we want you to actually learn the correct way. Okay, so it doesn't have to be complicated, but it can be very, very powerful. So option portion, we teach you 2 strategies. One is the short burst strategy. One is the trend riding strategy. All right, so whether if you are more active, you want to, like me, you want to do the short burst one. So make quick money within a couple of weeks. And if you are those long-term one, buy and then leave it there, right? There's also strategy using options to buy and hold long-term. Right. So everything that we have just mentioned, the fundamental, how to look at chart, how to do options and how to execute option, even on the platform, how do you actually click, where to click and everything is inside this platform, e-learning platform, which you can see there's actually about 10 modules, all right, that will cover the FA, TA, as well as the option. So some of you might be asking, why ultimate investing? Right, I think for us, it's very simple. The three co-founder, we actually comes from different background. So we actually combines the FA, TA, and options together to create these powerful and actionable strategies. So I still remember, in fact, this afternoon, right, one of the graduates actually came to me and he actually shared with me, hey, Bowen, I think I found a unique point about UI already. Is that right? Even though all the three co-founder, you all actually use different technique, right? But then you have this rule, right, that applies one. Because for example, for Paul, right, he's more of the FA person and he looks at dividend and all that, right? So basically what we shared with you, you can actually apply those strategy as well if you're more long term. But if you're like me, okay, whatever we share with you, you can also apply. So whether or not you are those long-term investor or you're a short-term, more active investor, all right, whatever we share with you, you can apply. So in a way, it's a lot more diverse and more dynamic, right? So I think most importantly, a lot of people is waiting right now. It's like, so Bowen, what is the fee of the masterclass? All right, so some of you might already know the price, okay, and in fact, we have already been posting it on the Telegram now. So the retail price is actually at $394, but because we are officially launching it this on the UI day itself. So in fact, on the UI day itself, we have a promotion, but we extended it until the end of this month. All right, so which means that the promotion right now is still valid, all right. So okay, this one I'll just skip, okay. But in short, okay, what happened is that for the promotion itself, what happened is that on top of the e-learning, we are going to throw in this masterclass. So because we understand that when it comes to e-learning, right, some of us, we don't like to learn and watch video. We want to actually talk to the trainer. We want to, have a live class going on, at least even if it's on Zoom. So that is why on the 23rd and 24th of January, we will be running a Zoom live class, okay, on a Saturday and Sunday. Right, so for this current promotion that we are having, the moment you sign up for the e-learning, you also get access to the 2 days masterclass. All right. So as you can see over here, this class alone we used to charge $1994. All right, for this 2 days class alone. But right now, if you combine the e-learning plus the 2 days course, we are actually giving you the 2 days class for free. All right, which means that you are only paying for $394. But you actually get both, okay? And we want to make it even better. Like I said, for this month itself, even if we lose money, right, we also will do it because we really want to grow the community so that more of you can actually join us for this current promotion that we are running. So we are not even going to pay $394. We even remove half price, minus $200. It is only going for $194. So to me, this is really, if you have not learned investing yet, if you have not started yet, get started. I would say that do invest this $194. Okay, this is going to be, I can say that this is going to be one of the best investment that you will make, at least for 2021. And it's actually one of the best promotion that we have run ever since the company started. All right. So maybe I'll just talk on how you can actually join us. So this 2 days program will actually be run by me, Paul, and Ivan. And certain times we might also get our coaches to actually come in. So we have 3 coaches that actually in our community, CS, Regina, and Rachel. So how do you actually join us? If let's say you are keen to actually join this 194, all you need to do is go to the link above bit.ly/team-sign-up. All right, very important when you go to this particular website, you need to key in a discount code. Okay, because without the discount code, it's $394. Once you key in the discount code UIDAY1321, it is going to be $194. All right, so this is the last slide that I have for all of you. Right, so basically today you join, you get an e-learning plus the 2 days class for $194 only. So I know some of the questions that we always get is that what if I can't make it for January bootcamp? We have another class happening on the March. So if you can't make it in January, you can join us for the March one. All right, so no worries. After March, we still have another date. If you can't make it, just join us on the following month. Right, so with that, I'm going to pass back to Paul.
Yep. So there are some questions. I think how long can we, from CK, how long can we access the self-learn recording module? Once you are enrolled to it, you can watch it as many times. We don't intend to have any limit. So it is yours. You can watch it as many times as you want. I think the lessons one with yeah. So the next one will be on the 6th and 7th of March. That's what we have. Somebody's asked about skill future. Unfortunately, we don't lah. But we also think that at this current price of 194 is really quite affordable. Like what Bowen has mentioned, one trade is probably all you need to do to get back. So we may explore it, but currently we don't have because there's a lot of overheads and logistics that we need to cover for that. So we can't. Yeah. So the link we will post it again. Remember to key in the discount code UIDAY1321 because if not, you'll be paying the full 394. And also to actually remind you all that the 194 is only applicable until 31st of January. After that, the discount code will no longer be accessible. Regarding the community, right, we'll talk about it more when you attended the Zoom course. Okay. The short answer is no, 194 does not include the community, but there we have an option for you to actually join the community, okay, at a small fee. Okay, but we don't want to talk about it now because I tell you now also no use because you won't know what is the benefit of the community. After you actually join our Zoom class, then you see the power of the community, then you decide for yourself, do you need this? Because it's very optional. Some people just after watching the 10 modules will be able to do it. Some people wants to join the community. Some people want to go further. So it's a lot of options. We put it very clearly to you. There's no hard selling. So it really depends up to you. Yeah. So that is what I have on my side. I hope I addressed most of the questions. We still got 126 people online though. Bowen, do you want to do a sing or dance?
No. Maybe I just show one time, just in case they miss out lah. Okay.
Okay.
So this is basically the link that once you go in bit.ly/team dash sign up, you will come to this particular this particular page lah. So very importantly, scroll all the way to the bottom, click join now. All right. And once you are over here, right, please remember to key in the discount code. So where do you get the discount code? Where do you click? Where do you submit the discount code? Is actually right at the top, right? Just hang on for a while. Yeah, you can see over here, add coupon code. So once you open it, you put in UIDAY1321, enter. You will be able to see that there will be a $200 discount given. So it will only be 194. All right, and then of course you can proceed with the acquired account information and of course the payment, etc., etc. Then you are good to go. So immediately after you make payment, you will get access to the online program already. Yeah. So in fact, before you come for the class, right, we want everybody to actually finish the e-learning first, right? Because the 2 days program will actually be more on experiential and also more on psychology, right? So we really want you to go through all the syllabus. Then you come for the 2 days, it will be a lot more rewarding for all of you, right? Any other questions do you all have? If you have no questions, actually, I think that's all from our side, right?
So, yeah, so we actually intended to do this only for an hour. I'm sorry that we actually have overrun, but I hope we are giving you value. And like Bowen said, usually two of us don't appear together, but I think this is a really very good offer, and we wish that a lot of you can take it up. And also, if you find it suitable for your friends, just pass the link to your friends also, because really, I think after January 31st, we can no longer afford to do this. So we will have to move to the 394 price going forward. Yeah. So the link is there. So take advantage of the offer, and really hope to see you in our Zoom class very soon.
Yeah, I think there's two final questions. Okay. I think thanks Rachel for answering. Yeah, the last day to sign up is basically the end of this month. That will be 194 lah. I mean, feel free to join in February as well, but the price will be 394 unfortunately. Then of course for May, can I join the March again after attending? So no, because for this we only are giving one-time access to the 2 days bootcamp. So if you join the Jan, basically, you won't be able to join the next one. So make sure that you are able to join the 2 full day, right? So don't worry, we have more slots coming up. So make sure that you can allocate 2 full days. Then you join us for the 2 days. All right. If there's no other questions, I think that's all from me. right? So I think we also want to say thank you to all those of you who are here, 100 of you who are still here. All right, we have overrun for almost 24. So we do not have, we do not actually put this on Facebook, all right, but we have actually a recording. So probably we will upload this on YouTube, but it won't be immediate lah. All right, so yeah, so do watch out for it lah. Do watch out for it on YouTube.
Okay.
All right.
So thank you everyone. Have a good night and really stay safe. If you have some friends in Malaysia, really stay safe also. And those in Singapore, don't be also stay safe lah. Don't anyhow run around. The community cases are going up. So yeah. So everybody take care. We'll see you all soon. Okay. Bye bye.
Thanks, Aline. Bye bye.
Yeah. Thanks, Aline.